In this video, we'll learn how to trade on Bitget. We'll go through a spot and futures trading guide in this video, and then we'll look at how to get fiat currency and crypto on and off the platform. There are some good options on Bitget. We'll go through everything, getting set up on the platform, trading on here, and making sure all of your security is in place. I'll leave timestamps for everything down in the description below. The first thing we can do is get set up for an account with Bitget. Now, you can use Google Sign In to sign up for an account, but I would recommend a separate email address for all of your crypto stuff. Now, I'll leave a link to Bitget in the description because they give fantastic trading and deposit bonuses if you're new. So if you click that link, you can see all of the details to the offers that they've got, trading, deposit, and other types of bonuses they run all of the time. So yeah, check the link if you want to see those details when you're signing up, if you don't have an account yet. Once we have an account set up with an email address, what we can do first is go to our security because this is important. So click this and then we'll go through to this page. The main thing to get set up here is Google Authenticator. This is an extra step between your account and withdrawing funds from it. So if your account gets hacked and they don't have Google Authenticator, they won't be able to do anything. What you can do here is download this application on your phone, click this, and then it's going to give you a QR code that you have to scan to link the app on your phone with Bitget. That is going to put the Google Authenticator code in between you and hackers. It's a 6-digit code that refreshes every 30 seconds. A key tip here as well, when you're setting this up, is to screenshot the QR code and the long digits that they give you, because if your device has any issues, then you can just reload the Google Authenticator code on a different device with that screenshot. If you're not happy with screenshots and keeping them on your device, just write down the long code that it gives you on a piece of paper and keep it safe. If your device has any issues, you can just reload it. This is really important to keep this in between, any potential hackers and the funds on Bitget. So set that up. I wouldn't recommend phone number verification, but just Google Authenticator. The other advanced security features, as we can see here, you can set up yourself. So you can set up funding code. This is an extra password if you want to withdraw, so another extra step for withdrawing funds. You can also set up passwordless withdrawals, which is a set of addresses that you kind of whitelist. So if you want to withdraw, you don't have to go through all of the extra passwords. You can set it up as you want. If you are new to the platform, you'll need to get your identity verification set up. This is otherwise known as KYC or Know Your Customer. So we'll click on ID verification. Now, every single upstanding and regulatory compliant exchange is going to ask you to do this, especially if you're using fiat currency. So if you want to send money in to trade with, you're going to have to do KYC on every exchange. So you can get some extra limits here. But really, if you're using fiat currency and you're trading here, you need to do KYC. So that's the government issued ID, either a passport or an ID card. Now, I'd rather do this on the phone because it's a little bit easier to take pictures of the ID card and scan your face. So I'll just show you on the phone right here if you want to download the app as well. I've been using Bitget for a while and I'm going to do my KYC as of making this video. So verify now. That's going to go through to the details. So you can take a photo of, your ID card and then scan your face, go through that verification. It's going to take a very short while. Once that's confirmed, you can use all of the features with Bitget. I'll also leave links below to 2 pages on Bitget that you might want to look at before using the platform. The first is Proof of Reserves. This is a cryptographic proof that Bitget holds the crypto assets that it says it does for clients. You can see all of the details here. It needs to be over 100, of course, 100%. You can see that here. You can also see the latest snapshots of all the cryptographic proofs. You can press audit here and it takes you through to an audit page. You can see everything here so that Bitget are holding the crypto that they say they do. You can also see Bitget Protection Fund here as well. This is currently 350 million. So if there's any losses on the platform for trading futures or anything like that, it's going to be paid by the Protection Fund. So just make sure that these things are working as they say they should when you're using the platform. Now we can make a deposit onto Bitget in order to go ahead and trade. Now there are very good fiat currency deposit options if you're in the UK and Europe, especially in some other countries. And so I'll go through that right now. Now the KYC details that you've given Bitget as well, they need to match up the details where the payment is coming from. So it needs to be you on both ends, whether it's from a bank or a fintech application or wherever, it has to be you on both ends sending and receiving into Bitget, and then you shouldn't have any issues. There are 2 main ways to get money in and out of Bitget. The first is cards, so credit and debit cards, and the other is bank deposits. Credit and debit cards can be very convenient, and you get a lot more fiat currency options here. So you get dollar options, and you can see all of these options right here. So there are many. However, cards are the most expensive way to get fiat currency in and out of crypto platforms. The card processing fees are very high. So as an example, USD here, let's say I want to put $100 in. I'm switching it into US dollar Tether, which is a stable coin, so it should match USD 1-for-1. You can see the fee here is very high. You're only getting $93 back. If you put $1,000 in, you're paying a very high percentage fee. This is just a card processing fee. It's expensive on most platforms. So just to be aware of that, it's convenient, but it is the highest cost way of doing things. Now, as of right now, you can see there's actually a rebate that they give you of 50% of the order amount. So that may be a short-term incentive that they're doing. It may not be around when you're watching this, but like I said, you can check the link below for all of the different offers and discounts and deposit bonuses they may have. But we'll go to bank deposit here. This is the recommended way if you have a supported currency. This is completely free of charge in terms of depositing onto Bitget. Your issuer or bank may charge some fees, but we can see here deposit fiat currency. We have pound sterling as an option, and you can use faster payments with a zero fee. So all you need to do is just send in from your fintech app or your bank if it supports it. So they're not going to block it for any reason. You can just send it in. We'll see Euro as well. Euro can use SEPA. So if you're in the Eurozone, you can use SEPA. Again, zero fee. So you just deposit that money straight in. And as you can see, very easy. You can also deposit rubles, Ukrainian, Brazilian currencies as well, which are supported for bank transfers. The others not supported for bank transfers, you're going to have to use credit or debit card. And withdraw fiat as well. If you have fiat currency on the platform, just press withdraw, and you can see it's a bank transfer as well. You can use the exact same method. There's a 50 pence fee right there, so obviously not very big. For euros, you can see a 50-cent fee. So again, irrelevant, but you can deposit and withdraw these fiat currencies in and out of Bitget. Before trading, we'll see a quick overview of the assets page. This is where all of your crypto and fiat currencies will be shown to you. So you can come to the wallet option here. Just click this box right here. This is your total assets. And then we can see our assets. Now, spot account here, that is for buying and selling crypto. So if you want to trade crypto, you'll have it in your spot account. Margin is when you're using assets that you have on the platform to leverage up your trades. We're going to be looking at spot and futures trading in this video. Futures trading is when you can trade in the futures market. You can go long and short. We'll look at that in this video as well. And then if you want to use other features like bots or the earn program, you will have to get assets into those specific accounts. The way that you do that is by pressing transfer up here. So press transfer. This is an internal transfer. What you can do is send assets from one account to the other. So if you have some money in your spot account, what you can do is send that into your futures trading account to trade, and then you can just press an amount that you want to transfer, press confirm, and that will transfer instantly for you. That's an internal transfer, so completely free and instant. Now, what we can do also is press spot right here. So we'll press spot, and that shows all of our assets. We have digital currencies, cryptos right here. And if you have any fiat currencies deposited, they're going to be shown to you right here as well. So you can see all of them here. Now you have options to deposit and withdraw, as we've seen, and convert as well, which I will show you in a second. Digital currency right here, you can see all of your assets listed. So from right here, what we're going to do is make sure that we have some assets in our spot trading account using the transfer feature. Now we can go ahead and actually trade in the spot market. So we're going to buy some cryptocurrency that we can own and we can withdraw from the platform. If you've deposited fiat currency onto the platform to just go ahead and buy crypto directly and own it, then you can actually go ahead and press trade, spot, and then trade the fiat currency directly for a crypto. That's the easiest way to do things, and so that's what I'd recommend. If you want to trade futures, which is more for day trading, then you're going to need US dollar Tether, which is the US dollar stablecoin to trade against. So if you have a fiat currency, you're going to have to swap it into USDT first. So you can use the convert feature. If you press fiat like this and then go to convert, you can simply convert your fiat currency by buying US dollar Tether right here. So if you have some, euros or pound sterling, you can sell that and then buy US dollar Tether. You can actually buy many other cryptos like this as well, Bitcoin and ETH. Now you can do that. It's very easy. I would not recommend this because you don't know the price that you're getting and you can't really see things. So again, this is convenient, but the fees might not be as low as trading in the spot market. So convert is easy, but we'll get onto the spot trading tutorial right now. Now I'll show you exactly how to trade and buy cryptocurrency on Bitget. We're going to look at the spot market first. I'll go through a futures tutorial in a second. So we're going to go to trade here, spot market, and then we can choose a trading pair that we want to trade. I'm just going to click on this one as an example, Bitcoin against US dollar tether. So when we buy crypto, we need to sell another currency. So you need to sell something in order to buy something else. And so everything is traded within a trading pair. And so we want to just choose the trading pair that we want to trade, right? So I'm choosing Bitcoin here. So BTC is the thing that I'm buying. And then US dollar tether is the thing that I'm going to sell to buy Bitcoin. What we can also do is just directly use fiat currency as well. I'll click on this right here, fiat. And as you can see, these are the fiat currency trading pairs. So if you've got pound sterling deposited onto the platform, you can buy US dollar tether. So if you want to go and trade in the futures market, you need USDT. You can swap it right here. We can buy Bitcoin directly, ETH directly. If we've got euros, we can buy them as well. And then some other fiat currency trading pairs right here. So if you have fiat, you can directly sell it for crypto right here. I'm just going to choose US dollar tether because I have some of that to go ahead and trade. So what we can do is just search for any crypto asset. So BTC is the ticker for Bitcoin, ADA, Cardano, Sol for Solana, ETH for ETH. You can see them all here. Just choose the trading pair that you want to trade. Now what we can see is this is the trading screen. If you go to the settings, you can change the layouts and some of the alerts that you get. I'm just going to keep it like this for now to keep it simple. So what we can see is the chart right here. Bitget give you trading view, which is great. It's a great resource. It's totally free to use. I'll link them below as well because it's a great trading system, but Bitget give it to you right here. Now we can see and confirm the trading pair that we're trading. So Bitcoin against US dollar tether. This is the price of that trading pair. So it takes $25,800 to buy one BTC. We don't have to buy one though. We can buy any fraction. This is some trading information. On the right-hand side, this is the market on Bitget. So up here, we have sellers who are opening their orders and showing us what they're willing to sell. Down here, we have buyers. They're opening their orders, telling us what they're willing to buy. These guys are what's known as bidding. So they're bidding for Bitcoin. These guys are offering Bitcoin. So this is known as the offer or the ask if you're in the States. And so where they meet in the middle, that's the price that they trade at, and that's the price of Bitcoin. So we can go ahead and trade here as well. And we can obviously buy and sell. Now, in terms of trading fees on Bitget, you can see for spot trading, you pay 0.1%. So very, very low. This is competitive, pretty much the same as most other trading platforms. Now, you can also get a 20% discount if you use BGB to pay for your trading fees. BGB is Bitget's exchange coin. So you'd have to go and buy some of that, like $10 worth or something. And then when you pay a fee, you get a 20% discount and they take the BGB out of your account to pay for the fee. Now, BGB is a risk asset. It may go up or down in value more than 20% at any given time. So make the decision whether it's important for you to get that discount or not. You may get a much bigger discount if it goes up. It may be much smaller if it goes down, but you can make your own decision there if you want that 20% discount. So when we trade, there are different fees known as maker and taker. They're actually the same trading fee, so it doesn't matter. But what is a maker versus a taker? A maker of liquidity is someone that is showing their order onto the order book. You can see all of these guys. They're making liquidity. They're showing us their orders. They're showing us how much they want to buy and what price. So they're making liquidity. Now, if we're taking their liquidity, we're a taker. How do we do that? Well, it doesn't actually matter on Bitget because of right now, the trading fees are the same. But sometimes taker fees are a little bit more expensive. If that's the case, then you might want to be a maker of liquidity rather than a taker. What is a taker? This is someone who just takes these people's orders off the book. So these people are showing us their orders. If we use a market order down here, market, what we can see is we can choose an amount of US dollar tether that we're going to spend, but we can't choose the price that we're trading at because we're just going to get the best offer when we press this button. I'm just going to get the best offer, whatever it may be, right? So if I just say that I want to spend $16, press buy, I'm going to take this guy's offer because he's the best offer. He's down here. He's the cheapest. And so that's what we're going to take. Now on Bitget, you pay the same trading fee either way. So it doesn't really matter too much, but that's a maker, the market order, which is where you say, I want to spend $20, buy BTC. It's going to buy it instantly for you and you're going to have it in your account. That's a market order. Now a limit order, you can see if I press limit, you can see these boxes will have one extra box. We can now choose the price that we pay, right? So market order is like going to the airport and just getting the price. A limit order is where we go and negotiate. So what I'm going to do is I'm going to choose an amount of BTC that I want to buy. I'm just going to click the slider again. So you can see US dollar tether. I'm going to choose $20 and the price that I want to pay, I can now choose. So if we go over to the right hand side, we can see the actual price for Bitcoin right now is 25,796. So if I put a limit order in and I put my limit order in at 30,000 Bitcoin, what's going to happen? It's basically exactly the same as a market order, because what I'm saying is it's just an instruction to the system. Buy me $15 of Bitcoin, and the worst price that I'm willing to pay, the highest price that I'm willing to pay is $30,000 per BTC, but I'm only buying 0.0005 BTC. It's going to go to the market and it's going to detect the fact that the actual price of Bitcoin is lower than my limit price, and so it's going to instantly buy it for me. What we can also do is put in a low price here. So I'm going to put in a price of 25,500. This is slightly below the current price, so I'm going to press buy BTC. Order type is a limit, 25,500. You can see how much Bitcoin I'm buying and the total cost. I'm going to press confirm, and that's in. So what's actually happening now, if I scroll down, is you can see my open orders. I have an open order because I have a limit order at 25,500 and it's open because it's not traded yet. My limit price, my max price that I'm willing to pay is below the current market price. And so the system cannot trade for me because that's the instruction I've given it. But it is there on the book. I'm now a maker of liquidity. I'm making liquidity on the book and it's way down here somewhere, but I'm working this order on the system. I can cancel this order. So if you just see above my head here, I'm going to cancel it. We can edit it as well. So I can actually up my price a little bit. I'm going to up the price to 25,750, something like that, right? So that's much closer to the current price. I'm going to press confirm and that's changed for me. So I'm now much higher up on the order book and a better chance of it getting done. I can also cancel that order right here. So cancel it and then it's canceled. So let's put an order in of 25,798 and I want to buy $20 of Bitcoin. We'll put 29.9 like this, and I'm going to press buy BTC, confirm. Can you see this dot here on the screen? This is my order at that price. So that shows me that I've got an order in here and it's working at this price and it's very close to getting traded. Now, if the price moves down a little bit, we will trade and it will show in your order history here, what you've traded and what you own. But until the price gets down to that, you won't own that Bitcoin, but the order is an instruction to the system to trade at that price for you. It's the exact opposite for selling as well. This time you have the actual cryptocurrency and you want to sell that into an asset. So if you do have some Bitcoin or other assets, all we have to do here is put in either a market or a limit order, choose the price that we're willing to pay at, so willing to sell at. So 25,000 now, 812, that's what I want to sell at. And that's going to go through straight away. We can choose an amount of Bitcoin to sell. Now, if you want to sell to fiat currency, just choose your fiat trading pairs. We're going to choose Bitcoin, pound sterling, and then we can sell Bitcoin into pound sterling. And then if you have pound sterling, you can withdraw it from the platform. So that's how you get fiat currency out, crypto to fiat, and then withdraw it from the platform. You can trade every trading pair here. You can buy and sell very easily. Now we'll look at futures trading on Bitget. There's some differences here between spot and futures, which we'll go through. The spot market is where you buy and own crypto and you can withdraw it from the platform and it's yours. What we're going to do is go over to futures trading. So we can click US dollar tether margin futures. We're going to click this and we can go over to futures trading. Now futures trading is more for short-term trading, for day trading, where you're looking to actually trade shorter term, but there's many advantages of trading futures, which we'll go through. The first one is that with futures, you are not buying and owning any crypto. A futures contract simply lets you make trades based on the price of crypto. So essentially, you can make trades that benefit from the price going up, which is known as going long or buying long. And then you can make trades that benefit from the price going down by selling short. And you don't need any crypto to sell. You're taking a position that benefits when the price goes down. The reason is you're not actually buying or holding any cryptocurrency. You are trading a synthetic contract where you exchange the price between when you open the position and when you close the position. So this is for day trading and short-term trading, right? So essentially you open a position versus someone else, and then when you close the contract, you are exchanging the balance, either a profit or a loss, when you close your trade. So this is for day trading and short-term trading. You don't own crypto here, and you can't take it off the platform. You are just making profits in dollars, essentially, US dollar tether, which is why we need US dollar tether in order to trade these futures. You can see there are no fiat currency options here. You can trade US dollar tether versus a bunch of cryptos, and you're taking positions on the price where you either make a win or a loss, right? So you either gain or lose depending on how your trade went. So what we can see here is that there's a few different types of futures contracts. You have US dollar tether margined. This is where you are margining your position with US dollar tether. When you trade futures, you simply collateralize any potential losses. So let's say you have $1,000 that you put into your futures trading account. You can open a position worth $1,000 or $2,000 or $5,000 with leverage. And that $1,000 is just simply there to fund any losses that your trade may have. So that's how futures works. So this is definitely more risky. And it's for day trading and short-term trading as well. I've got way more details on futures trading and how it works. I'll link those videos down in the description for you to go through step by step. The Crypto Investor course also has like 25 videos on futures trading, literally step by step on how it actually works, how to manage positions and everything. So if you really want to know how, I would recommend the Crypto Investor course. I'll link it in the description as well. But what we have here is the ability to trade the price of crypto. So we have US dollar tether margined, which is where you use US dollar tether as your collateral to pay for any potential losses. You also have coin margined, which is where you use a crypto asset value to back any potential losses. Coin margined is a little bit more risky because crypto assets are volatile. And so your position, your collateral may go up and down in value, which may jeopardize some of your positions, right? If you're making a loss in a position and your crypto collateral is going down in value as well, it's not great, right? And so the system is always going to liquidate your position at a loss before you get in any bad debts. So you're not going to end up with a huge debt that is more than you have on the system. They're going to liquidate the position if you make a loss and you can't pay it back. There's going to be a time when essentially you won't be able to open any new positions, and also they're just going to liquidate your position, which means sell everything out and take the loss for you. And you can see margin ratio right here. So if you have margin ratio, you can see your margin ratio health. Once it gets down to a certain percentage, they're going to start liquidating your positions. So what we're going to do is we're going to transfer some assets into the futures trading system. So we're going to go from the spot account into futures. We'll just put everything in here, $100. So we're going to press confirm. And now we have $100 of margin to go ahead and trade within the futures market. So this is very similar in terms of the layout. You have the chart right here, the price of the asset, which is Bitcoin right now. Now, the only difference here is that you can buy long and sell short your positions without owning any crypto, right? So if you want to go long, price goes up, you win. If you sell short, you can sell first, buy back later at lower price, and so you benefit from the price falling. You can do both of these, when trading on Bitget. You can also use leverage when trading futures, and if you're in a country that Bitget allows you to trade with leverage in, then you can use that. So up at the top right here, you can see this isolated. I'm going to click on this, and you can see isolated versus cross. What's the difference? So margin is what we need. We need the collateral to fund positions when we open futures trades. Now, isolated margin means each and every trading pair that you trade, you fund individually. So you have an amount of dollars that you set aside for that trade, and you are funding that trade individually from other positions. So you have a Bitcoin position, you're funding that. That's separate from the collateral that you use to fund your ETH position or your XRP position. If you choose cross, that means that you have an account, an account with collateral, and that is used to fund all of your positions at the same time. If one position starts losing, then your collateral is going to be sucked into funding that position, and it may actually affect your other positions. That's why most people use isolated margin and just, have separate buckets for each and every trade. If one trade goes south, that loses, and you don't have to use the collateral for other positions. However, you might want to, collateralize the losing position if you think it's going to come back. Cross may work for you, but isolated is the one most people choose because you can take margin out of some positions and switch it into other positions. So we'll choose isolated margin right here. We can also choose an amount of leverage that we take with each trade. I'll explain that now. Leverage is how much money that Bitget is going to give you on top of your collateral. So I've got 5x here on long and 10x on short, and you can change them. This is the normal amount that you can enter into a position with. Now you can change this when you have an open position, but if you just quickly press buy, you're going to be using 5x leverage because that's the standard for the account. If I press this, you can see 5x leverage. This means that if you open a position and you fund it with $1,000, Bitget are going to open a position that's actually worth $5,000 in the market. So that's 5x leverage. Then you're funding that $5,000 position with the $1,000 that you have. Now, why this is more risky is because if a $5,000 position goes down by 20%, you lose $1,000, your account's wiped out. So that's why it's more risky. Now, if you're just trading with zero leverage or 1x, then you don't have to use any extra leverage. You're just funding a position in its entirety, and so there's basically no extra risk versus holding the position itself, right? So that you can choose this whatever you want. Now, I can't recommend using leverage because it is extremely risky, and for most people it just simply is not recommended. But we can choose any amount that we want, so we'll just put 4x leverage here, and then on the short side, we can just do, let's say, 4x leverage as well. So we'll click that, 4 or 5x, whatever you want. That's on the long and short side, but you can change the leverage after by funding the position with more money or even taking money out of the position. And that, of course, increases or decreases the leverage. Now, I'll show you how to open positions when trading futures, because there's two things that we need to be aware of at all times. The first is the total value of the order in the market. And the second is the actual cost of the order to us, because those things are different because we're using leverage. So what we're going to do is choose a limit order, and I'm going to choose a price of 25,800. And then we're going to choose an amount of BTC that we want to go ahead and buy. I'm going to open a long position here. So we'll just slide it up as well. You can see that, but we're going to trade around 0.003 Bitcoin. And you can see how much this is going to cost us. So we're actually using leverage. 0.003 BTC at this price is around $80, $90 worth. But you can see the cost down here to us is only $20. And that's because we're using 4x leverage, right? So what leverage does is it just means that you can put less money down to fund a position. So you don't have to take more risk if you're trading short term, because you may have stop losses in place that prevent losses below a certain price. So let's go through this. We have 25,800 price that we're going to long Bitcoin at. We're going to buy 0.03 BTC, and we're going to put down $20 into this trade right here. The actual order value is around $84, $90, something like that. We don't have to put that down. The important thing when trading futures is this thing here, which is the liquidation price. You can see our liquidation price is 19,439. So let's put that on the chart, 19,439. It's around this price right here. Call it around there. So what we're seeing is, because we're using 4x leverage, our position, if it's in a loss, is going to eat up this $20 that we're funding the position with. If the price gets down to this level, we're going to be liquidated at that price. right? So that's our risk. Now, if I'm using more leverage, so let's go and use 10x leverage, right? And what you can see is that everything stays exactly the same. We're buying at the same price, we're buying the same amount of Bitcoin, but look how much money I'm putting down into the trade. $7.86, right? So the actual value of the trade is exactly the same that we're opening in the market. We're just using more leverage, meaning we're putting less money down into that trade to fund the trade. What that also does, though, is increases our liquidation price to 23,327. 23,327 is around this price. So you can see that the only thing that's changed is that our liquidation price is way higher because we just have less money to fund losses within the position, right? So which one is more risky? Well, this one is more risky because there's a higher chance of you getting liquidated because it's closer to the current price. So of course, leverage increases the risk in that respect. In terms of the money that you are risking, it's the same amount because the trade value is the same, the total trade value. Now, if your liquidation, like if your stop loss price, right? Let's say you're going long here and you want the price to go up, but actually you have like a stop loss price, right? So like a price where you're actually setting that you want to take a loss at, which is before the liquidation price. Let's say your stop loss price is around here. We'll just change that to a different color. Then maybe it doesn't matter how much leverage that you're using because you're going to stop your position out. You're going to take the loss before any liquidations occur. So in terms of leverage, the real thing to note is the liquidation price below or above your own stop loss? As long as your stop loss price is set at a level and the liquidation is below that, if you're going long, then the leverage that you can use is kind of up to you because you're going to be getting out of your position earlier anyway. Now, when you're getting much larger positions, there's obviously a lot of dollars that we're talking about, but that's how to think about leverage, is that if you're using leverage responsibly, you may not even have to make any larger bets than you would anyway. If you're, for example, you want to trade $100 worth, you can use extra leverage to make a bigger position as long as you know your exact loss between your entry price right here and your stop loss price. And that will be a dollar amount. As long as you're happy with that, then you can play around with the leverage to see if you can put less down in the trade. If you put less down in the trade, you have less money on a centralized exchange, which is often what people are looking for as well. I'll quickly show you how to determine how much risk you're okay to take within a futures position as well. So what we can do is go to a trade size calculator. You can look one up on Google. I'll try and link this one below as well. What we're going to do is put the trade details in, and then we're going to risk a certain amount of our account that we're trading. So what I'm going to do is I'm going to open a long position here at 25,800. You can see that one here. So this one, the open price is 25,800. And then what I'm going to do is determine a level where the trade is going to move against me. So I'm going to go long here, and I want the price to move up. Now, if the price moves below this level, down to this level, I think that my long trade is wrong. Okay, so we may be testing out lows and going lower. So this is the price where my stop loss is at 24,000. The yellow right here, 24,664. 24,664. And what I have is an account balance of $10,000, and I want to risk 2% of that. So you can see I can trade a size of 17.6. My money at risk is 2% of 10,000, which is $200. Let's just put it down to 100 to make it even simpler. You can see the decimals change, but everything stays the same, right? So I'm risking 2% of my 100, which is $2. The trade size that I can trade is 0.00176. So you can see BTC right here, 0.00176. That would be the amount. Let's just do 002 because that's the minimum. That is the amount of Bitcoin that I can trade to risk $2, right? Because this is the trade size. And if I buy here and sell at this specific price, I will make a $2 loss. What we can also see and check is that the liquidation price is 23,327, which is below our stop loss price. So this is a way of actually knowing exactly how much risk you have in your position when you're using a stop loss. And you can obviously choose to risk any percentage of your portfolio that you want. Most traders will risk maybe 1, 2, 3% of their portfolio in a trade, maybe a bit more if they're confident on the trade. So when using leverage, just use it responsibly here, and use a stop loss as well, a level where you are going to get out of the trade before any liquidations occur. I'll quickly show you how to set a stop loss then. So with stop losses, you're going to be looking at technical analysis. It's too much for this video. Like I said, crypto investor course for everything TA. I'll leave some free videos down in the description as well. What we can do here is open a long position. So what we can do is open a long with what's known as a TPSL right here, take profit stop loss. Going to click this, and now we can put our stop loss in straight away. We don't have to put a take profit in straight away, but I'll put my stop loss in at 24,664. That stop loss is what's known as a trigger order. A trigger order is an instruction to the system to say, if the price gets to this level, then sell at this price. That's different than a limit order that we've seen. A limit order you can't use for this type of trading. A trigger order is just simply an instruction to say, if the price gets to the level that I tell you, then do as I say, which is in this case a stop loss, which is a sell order because we're going long. So we're going long and our sell order is here. That's a trigger order at that specific price. You can also use trigger orders directly within the system, as you can see here, which again is exactly the same thing. So at a specific price, which is the trigger price, 25,400, you can execute at the price of 24,400, 25,400, and you can execute, 0.05 BTC, whatever it is, right? That is a trigger order. It's different than a limit order. Limit orders, let's say I want to buy with a limit price of 30, it's going to trade straight away. If I put a trigger order in with a limit price of 30, it is not going to buy until 30 is met. That's why limit orders and trigger orders are different. So we're going to go back to our limit order, and we're going to put, actually, I'm just going to do a market order here just to show you to get the trade done. So market order, 0.002. We're going to take long stop loss with a price of 24,664. That's our stop loss price. We're going to go long at this level, so we're just going to buy long. And you can see the cost of the order is $10 because I'm using 5x leverage this time, so buy long. You can see the details here, confirm, and that should open up my order. Now you can see everything here. So what do we have? On the chart, we have a few things. The first is our stop loss. Can you see that? So that is the stop loss that I put in when I was entering the order here. That is, if the price of Bitcoin gets down to this red line, it is going to sell my Bitcoin. So that is the trigger order that we have in. You can see the long position is here as well. It's in green or blue now because it's apparently in a tiny profit, from that movement. And it's in a red now, so it's in a tiny loss. If this price moves down to our stop loss level, it will sell out for us. Now you can also edit this. So you can see the order details. I have my position. The total position size is $50, but I'm only funding it with much less than that. You can see the margin ratio is 20%, and the liquidation price right here is 20,000. Now you're paying some fees and everything as well, so that's gonna dictate the prices a little bit. You can see my entry price, and you can see the margin that I've got an account is 10. If you want to add more margin into the position to reduce your leverage, just click this. You can add more margin in here. I can put in an amount of dollars that I want to add to the position. I add dollars, I add collateral, and I reduce the leverage. If you're getting near to your liquidation price and you don't want to be liquidated, you have to add margin into your account, which is this edit button right here. You can also see take profit and stop loss here. I'm going to click the edit button. So I'm just going to say understand. My stop loss I can change. So I put in a stop loss before, but if I want to change the stop loss, any price, I can put that stop loss price in here. So maybe I want to change to 24,000. I want to move the stop loss down a little bit. I can do that. You can also put in a take profit order here, which is another trigger order. This is to sell above the current price, right? So if you entered in at this level, you can put a take profit order for 28,000, and it's another trigger order. Again, if it gets there, you're going to sell and actually keep the profits, and that will be along here. So you can see all of your orders on the screen right here. And then you can see realized P&L, which is 0, unrealized P&L, which is a little bit of profit right here. What's the difference? Unrealized P&L is the profit that you have in this position right now. Realized P&L is when you actually start reducing the position size and taking profits out. So you can see that the, I'm making a tiny profit right now. So what we can do is close, flash close. Flash close is completely get out of the position, sell everything and take all of the risk out, close everything, sell everything, and just return everything, whatever the profit and loss is to my account. You can also press close here. So I'm going to press this. And what you can do usually is close an amount of the order. So let's actually go up to close. So we can do that here. So what I'm going to do is that I have an amount of Bitcoin that I have an open position of, right? So I have a 0.002 BTC that is long in my account. What I can do is close a portion of that. So as you can see, I can slide this around. So you can close the BTC order and then choose an amount of your order you want to close. So if I want to close 50% of it, I take 50% of the order out, and I might realize some profit and loss at that point as well. This is good if you're making profits and you just want to kind of ratchet out of a position. You can do it in dribs and drabs. You can close 20% of it. You can close 50% of it. And as you can see, you want to press this one, close long. What you're doing there, because you have a long position, you need to reduce that long position so you can close an amount and then press close long. What you're doing is selling and closing the long position a little bit, and you press close long and you can take a little bit out of that position. What I'm going to do just to show you is flash close. So I'm going to press flash close. It's going to show me the details here. Just press confirm and everything's gone. And you see the P&L, whatever it was, just goes back into my account. If you want some more detailed futures trading videos on managing risk and managing positions and trading strategies, everything's down in the description. The Bitget link is down there as well. Deposit and trading bonuses Bitget give you, so check the details via the link that I'll leave down in the description. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.